It's Top That Trade Day. Joining us, Alan Nuckman, the Chief Market Strategist for St. Paul Research, and Phil Flynn, a Fox Business Network contributor. Here we go, guys, with round number one of our trader game, summer surge or setback. What did the Monday sell-off signal for the S&P 500?
Well, first off, it was only 2%. That's not really a sell-off. That's a profit-taking pullback. Everybody got very nervous, but we are due. We haven't had a 5% pullback yet in this year, and usually since 1950, there's been 3 of them. But on the upside, S&P 5000 is very attainable. All we have to do is 8% for the next 2 years, or you got to see Apple, Amazon, Alphabet, Facebook, and Microsoft rally 30%, and the other 495 stocks can just go slow.
It has been a one red hot summer, and it was a little bit scary. And I do have to acknowledge that the risk of the new wave of the Delta variant of the COVID-19 is a risk. And if we do start to see the economy shut down, that could hurt stocks. But we don't see that happening. I'm not a doctor. I play one on TV sometimes, but I'm not really a doctor. So I don't really know. But from most of the experts I'm talking to, it's, we don't think it's going to lead to a shutdown in economy. In fact, the Wall Street Journal said exactly that. So we're worried about the COVID-19 as a risk, but we wouldn't let it change our stock portfolio. We're still very bullish.
Round number 2, 70 setups. What did best in 1970s when inflation was raging, and how does that compare today with some possible opportunities?
Yeah, I mean, I'm telling you, the 70s, I remember the 70s inflation. I'm old enough. I remember, the loaf of bread was 10 cents, then 25, then 50, and before you knew it, it was crazy. But yeah, there's a lot of stocks that can benefit in a high inflationary environment, and I think that's what we're trying to say. Not all inflation is bad. There's bad inflation when it gets out of control. There's good inflation as well. And companies that can take advantage of inflation by passing on costs or benefit from, higher interest rates, such as banks, should do very good in a high inflationary environment. The big thing is a little inflation is okay, but if it really gets out of control, starts to hurt the economy, it could hurt the earnings of some companies, and the consumer stocks are the ones that are most at risk in an inflationary environment.
All right, let's talk about this as reflation, not inflation. But to compare it to the 70s, since Phil was there, it was an energy stock boom. The 10 years from 71 to 81, energy stocks went up 70%, and the S&P went down 15%. So pay attention to energy. It's had a bit of a bounce here, but like Phil said, inflation is not necessarily bad. And actually what we're seeing now is it's giving some firms pricing power. They can raise prices, and that can help increase their profit.
Chipotle is one of those that did very well by raising their prices in this environment.
Round number 3, 50-year funds. The index funds turn 50. What funds do you think are fantastic trading now?
Well, I think they all are. All of the ones that have good liquidity. There are some funds and some ETFs and some of these constructions that may not have a whole lot of buyers and sellers. So make sure the most important thing that I say about a trade is I'll trade anything, any direction, anytime, as long as I can get in and out and execute my trading plan efficiently. But this has changed the game. Passive investing now and following the S&P is so easy, and so many people do it. And until proven otherwise, that's been the route to go.
So it's the 50th anniversary of index funds, the 50th anniversaries of the Milwaukee Bucks winning the championship. And their star player scored 50 points. How can you not like funds? This is a sign, right? And just think, if you bought the index funds back in 50 years ago, where would you be today? That's it. So Alan is exactly right. Index funds are here to stay. Now, there's always been a concern about sometimes, long-only funds, long-only commodity funds, that they can distort the price, distort the market, and they would be a risk if everybody exits them at the same time. Well, we've had a 50-year track record, and we've had some major sell-offs, and we've seen what happens when people start dumping them at the same time. We saw it in 2008. We saw it in 1987. But for the long view, the index funds are probably the best way for most of you people at home watching to be in.
Congratulations to the Bucks. I'm glad that you mentioned that, 50 Phil. Here's your bonus round question for today. Which gender has the biggest carbon footprint? Is it men or women?
I'm going to say men. just because.
Men, my first thought would be men, and he's probably right because they drive cars, they fly, they do all that stuff. Women though do too, and they use a lot of hairspray. Do you ever know why men use hairspray too? This is a very difficult question, but I'm going to go with men as well.
2 winner chicken dinners. You are both correct. This week it's men because of the cars that they drive based on a study done in Sweden. Great job, guys. Go to businessfirstam.com for where to see our show on TV.